Okay, welcome back. So we've got the pre-open session coming up in about a minute or so. The SGX is indicating of a 60-odd point lower start. Anuj is here in the studios to tell us how he's seeing the setup. Anuj, hi. Morning.
Morning, Prashant. Morning, guys. There's, of course, data and price action. I give importance to price action. The market sell-off in US was not really big. I mean, if this data had come 3 months back, my sense is market would have fallen a lot more. And Indian market, in any case, remains in a bit of an uptrend. The only issue is NASDAQ. The 1st December huge bar that you had, the 7% gain, it's almost given up all of those gains. So it's back to banks and old economy stocks and new economy stocks underperforming. I think that's something which may resume in India as well. The Bank Nifty has been outperforming, and that outperformance may extend. Also, you could focus on mid caps. There's a big rally going on in mid caps, and now that the event is out of the way, this rally would resume. In fact, this month, the Nifty is down 0.5%. The mid cap index is up 2.5%. So there's 3% divergence. And my sense is you might see another 3 or 4% in the balance, days of December. For the day, the gap down perhaps would be a bit of a godsend because it will take you in that very important support zone, 18,570 to 18,605. That's, from the options point of view, very important, and also where the 10-day exponential moving average is placed at 18,576. And I mean, and my sense is that that could be bought. The 20-day moving average is at 18,495, the 20-day exponential moving average. That becomes your second support. And there might be some resistance at that 18,670 to 18,700 like yesterday. That's where some profit taking might come. And my sense is, again, because it's expiry till 3 p.m., traders will have to take small profits. I think the Bank Nifty could be very interesting. If it holds 43,900 to 43,950, it actually may not fall a lot today. And if it crosses 44,150, yesterday's high, then a very fast move to 44,300 is also possible on the Bank Nifty. Overall, the setup is actually a buy on dips kind of a market.
Okay, a buy on dips kind of a market. Thanks a lot, Anuj, for that. Have a good one. Let's move on. Ashish Chaturmutta, Head Research at JM Financial Services, is joining us now. Ashish, hi, good morning. Your thoughts on how to approach the market if the dip comes through, which in all likelihood it will. Do you suggest going and buying it? And what are the stocks to look at this morning?
Hi, good morning. So yes, I think the broad structure of the market is quite promising, and in fact any dips in this market is going to be an opportunity to buy. We firmly believe that the way the data is panning out, it looks like 18,500, 18,450 is going to be a crucial support zone from a medium term perspective. Until the time we don't breach 18,450, it looks like we are heading towards 19,000 kind of trajectory at an index level. But the strong relative outperformance is coming from banking and financials because the focus is on domestic led economy, and that's where I think the stock pick is also basically from banking, financials, capital goods and manufacturing as a theme. So my first pick within the banking basket is the large cap HDFC Bank, which has seen a massive underperformance in last 1 year versus its peers. But in the last few weeks, we are seeing a strong activity getting built up into HDFC Bank's share. So I think there's a good breakout on the technical charts as well in the recent time. So one can initiate a long keeping 1630 as a trading stop loss. On upside, 1730 would be my short-term target in HDFC Bank. In the second bank which we like is IndusInd Bank, which has again seen a massive underperformance in last 1 year time frame. So now there is some strong OI build-up activity which is happening into IndusInd Bank shares. One can initiate a long, keep 1235 as a trading stop loss. On upside, 1320, 1330 would be my immediate short-term target again in IndusInd Bank. We like capital goods as a theme, so whether it's L&T, Cummins or Siemens, all are looking quite promising. But if I have to pick one, then L&T looks quite promising. At current levels, I think the stock is consistently seeing a build-up of long position, and there's a lot of delivery volume pickup which is also happening into the stocks. So one can initiate a long at current levels, keeping 2150 as a trading stop loss. In the immediate short term, we expect the stock to hit 2300 levels, but positionally, we believe stock is poised for a move towards 2500 levels. And last but not the least is ITC, which is forming a very strong base at current levels. So at current levels, one can initiate a long, keep 339 as a trading stop loss. On upside, 360 would be my short-term target in ITC.
Okay, all right. Well, the pre-opening rates are settling in marginally lower, nothing alarming, down about 40-odd points. ICICI Bank, HUL, Hindalco, Bajaj Auto are a couple of stocks that are a bit under pressure at the moment in pre-opening. And on the upside, SBI Life is the stock that is having a big move this morning. CLSA put out a note on SBI Life with a target price of 1650. So there's a big upside expected over there. But let's get to our new segment, Market Laser, and some laser-sharp focus on individual stocks is what Prashant has. Prashant, what are you looking at
I mean, the idea, Sonia, Nigel, is to highlight setups which may kind of provide opportunity one way or the other. To be sure, this is not trading recommendation, but just highlighting things which may come into play. So, by the way, today I'm focusing on Page Industries. I had this for yesterday, but I didn't put it out yesterday. I put out that PSU Bank piece. So I went back and looked at what happened to Page Industries, and I thought, well, I think I should put it to, today, because if anything, what the graphic that you will see highlights that trend line. It's a simple trend line drawn from the lows of September of 2020, which is 2 years ago. There is the lower touch point, the starting touch point is that. Then you got a touch at June 2022, earlier this year. I mean, Page has never traded below this particular trend line over the last 2 years. And yesterday, for the first time, it's broken below that. So we are still below that. I also kind of looked at the 20-day moving average. By the way, on the Page broke below its 20-day on the 1st of December this year. And it kind of has been around those levels. It perfectly coincides, the 20-day perfectly on Page coincides with yesterday's high. So you got a few things happening there. So I thought just to kind of put this on the radar, it could kind of accelerate. These things typically tend to do, given, of course, how the market performs as well. By the way, there was news flow on Page, which we put out yesterday. So just a quick thing. So Kotak highlighted that they met the CFO of the company, and they highlighted near-term demand being somewhat tepid on high inflation. They highlighted that raw material prices are easing, but that will take time to come through into margins, gross margins. Although they said that medium to long-term growth targets are between 50 and 20% penetration, etc. in a segment. We all know the Page story. The point is, stocks like Page never trade cheap. Consumers stocks actually, B2C sort of stocks in India never trade cheap. And that's just the fact of life here. But they do kind of give you opportunities in short periods of time. And that's the idea behind putting these kind of setups out. And today, it is Page. Gurmeet is with us. Gurmeet, quick thoughts. Anything on Page? Do you like it? Do you own it in the portfolio? Would you like to? Go on.
So, Prashant, as you made the point, I think the valuations still are stretched despite. So it's been a great wealth creator, except for last maybe 3-4 years, where, in fact, in the last 4-5 years also it's a 2x. It hasn't done that badly. But, I think what the challenge we see, and I come from a distribution background, is that the growth has been largely realization led. Volume growth utna nahi hua hai, and that's what is because when you command that 50-60 multiple, you need to constantly demonstrate that growth. Also, there has been a lot of competition from brands in the segment, getting into not only just the premium innerwear but also into athleisure and other segments. So now what they are trying to do is they are expanding distribution footprint. They were very reluctant earlier. They were very selective. So they're going to tier 4 towns now. They've almost added more than 30,000 outlets, last year. So they're doing that. So I think that volume growth has to come back. And with volume growth, as raw material prices soften, if you can get more better realizations, then you can justify this valuation. We're in an environment right now, if you pay that 50 multiple plus, the growth has to be good enough to justify that.
Okay, just a couple of more stocks, right? Poonawalla FinCorp is up in the green, up almost about 1% or so. And on the downside, on the back of the OFS announcement, IRCTC was expected that could be under pressure. That's down about 5%. But Sudarshan is with us. Sudarshan, what's the big call at 9:10?
Well, the big call is to buy Adani Ports. Keep it as a positional trade, and the stop is under 879. Avoid the Nifty.
And Mitesh, what about you?
I'll go with the long on Balrampur Chini. On a mild decline, buy with the stop at 374, targets 392 here.
All right, gentlemen, thanks a lot for that. Well, let's get chatting about the metal space then. Amit Dixit, analyst at ICICI Securities, joins us to help us with what's the outlook for metals from here on. Hi, Amit. Good morning. Amit, you have the dollar that's weakened a little bit. There's hope that China reopens. How are you reading this, and how would you approach stocks? Do you believe that you look to get into some of these ferrous names, or will you stay away till there is some clarity that emerges?
Yeah, hi. Good morning, Nigel. So what we have seen that while there has been some movement around China and the fact that President Xi himself has mentioned that there could be some relief on the zero COVID tolerance policy. Nevertheless, what we see that the infections in China are creeping up again, and therefore the proof of pudding is in eating. We would actually wait to see how things pan out. And particularly if you see domestic metal space, I mean, in this particular quarter, contrary to what we have seen in the past years, this quarter has been a tad weak. And coupled with the fact that steel companies actually cut their prices by close to 3,000 rupees for December, and the fact that imports have started pouring in, I would consider steel space a bit tricky at the moment. Our top pick in the steel space is JSPL, though.
Okay, you have a JSPL stock pick with a target price of 605. You're also positive on a name like APL Apollo. Tell us a little bit about that. And, you know, the last time we had spoken to the management, they were very bullish about their growth targets, and they also spoke about becoming debt-free. What is the target price that you have then? What's the growth trigger?
Yeah, so APL Apollo, sorry, I mean, this is a stock in which, it's a converter, kind of downstream unit. I mean, if I am permitted, I can actually draw comparisons with Novelis, though in not equal measure. But the fact remains that they are converters, so typically they have they have the margins intact. Now, in case of APL Apollo, their premium segment is going to be in limelight. In fact, they are increasing the production over there from their Raipur plant. I believe the production will be ramped up, and therefore the volume goes up, and your overall EBITDA per ton also will inch closer to 5,000 rupees per ton. I think that will drive the stock. So in the current scheme of things, where you have at least an iota of doubt on the margins made by the primary steel players, this is one stock that stands up because of the potential volume growth as well as the margin improving because of refined product mix.
All right, Amit, since you briefly mentioned Novelis, what's the view on the non-ferrous space then? How do you view Hindalco, Vedanta, Hindustan Zinc from here on? Would you buy any of them?
Well, we have a buy on Hindalco. We are positive on Hindalco. The reason being that Hindalco again, as far as Novelis is concerned, in this quarter we expect that the margin would bottom out essentially, and with the volumes picking up. And if you look at Novelis, the auto volumes are up, and your aerospace is doing well, and these are very high margin businesses. While beverage can business, I mean, contrary to what consensus was expecting, there is a tad weakness over there. But again, it's a very, very stable business. So with 3%, 4% volume growth, I think Novelis should be able to meet its volume targets. The only thing is that EBITDA, the management has also guided that it will bottom out. As far as the upstream business in India is concerned, well, I mean, cost will peak out. Cost has actually peaked out in last quarter, and we would see improvement there also. So earnings for Hindalco on a consolidated basis, I believe, will bottom out in this quarter. And given the fact that it is less dependent on LME prices, we believe that there is a element of positivity over there.
Sure. All right. Thanks a lot for joining in, and have a good day. Well, we're also looking at a couple of more stocks in focus before the markets open. LTI Mindtree, the merged entity, is in focus. CLSA put out a note where they've initiated an outperform rating on LTI Mindtree. They have a target price of 49.20, so well above the current market price. They talk about how post the merger with Mindtree, this company will be the fastest growing amongst the Indian listed IT companies, with a market cap in the range of $10 to $50 billion. So they talk about a superior growth outlook, how the balance sheet is very healthy of the company as well, and the institutional ownership is low now compared to what their peers have, and it's a very attractive structural play from a long-term standpoint. The only niggling worry is valuations. So valuations are a bit full, CLSA says, at about 24 times FY24 EPS, and that could perhaps limit the upside in the very near term. But otherwise, post the merger, it will be one of the fastest growing listed IT companies, and hence CLSA is quite positive on that stock.
Okay, all right. Sonia, thanks a lot for that. By the way, a couple of large trades have taken place in pre-market. So Nykaa is one stock where there's a large trade that's taken out there. And Sapphire, well, the deal has happened actually in pre-open. So interesting to see how the stock reacts because 10% has changed hands and the stock is up 2% odds, Sapphire. But the big deal that was announced yesterday is on Poonawalla FinCorp. Abhishek joins us to run us through a quick analysis on that. Abhishek?
Well, Nigel, as you mentioned, Poonawalla FinCorp is selling its housing finance arm to TPG Group for 3,900 crores. So the valuation is about a price to book value of 3.4 times Q2 FY23, and the deal amount translates to about 51 per share accrual for Poonawalla FinCorp. The Poonawalla housing arm is a pan-India affordable segment which it caters to. The AUM is at 5,612 crore, built largely over the last 4 or 5 quarters, which means that the book is yet to get seasoned and see cyclical trends over there. So gross NPA ratio was at 0.84%, net NPA ratio at 0.5%, and it's a AAA rated entity by CARE. Back to you.
Okay, thanks a lot, Abhishek, for that. So that is on Poonawalla Finance and the deal that has taken place over there. But let's get back to the markets now. You have just about less than a minute, actually, 9 seconds before the markets open for the day. Looks like it's going to be a slightly soft opening, but nothing alarming. Compared to how hawkish the Fed was, this is a decent opening that you would expect from the market. The Nifty down just about 45 odd points, Sensex down 160 points. In terms of individual stocks, it is secular across, sectors on the downside. Infosys, ICICI Bank, HUL, Reliance, Bajaj Auto, all down about 0.5%. The cuts are restricted to 0.5% actually. So you'd have to say that it's not a bad outcome compared to, what we got in terms of cues from the US Fed. Hindalco, Tech Mahindra, HCL Tech are a couple of other stocks that are trending on the red line right now. On the upside, HDFC Life, SBI Life, these life insurance companies are doing quite well. Positive brokerage reports coming in there. NTPC is up about 0.8%. Britannia is trending in the green line. UPL, SBI and L&T are both sitting at fresh 52-week highs. In fact, it's been day after day of fresh highs for these two heavyweights, and that continues today as well. SBI is now up over 36% this year. It's had a dream run this year from the PSU banking space. A couple of other stocks, Sun Pharma, Eicher Motors are all trending in the green. In fact, Pharma is not doing badly at all. Divi's Labs, Cipla, Apollo Hospitals, Sun are all in the green right now. Perhaps some safe haven buying over there. Largely for the markets, it's a good opening. The mid-caps actually in the green. So decent opening there.
Well, very good opening actually. Sonia, the first dip, whatever it was, it got dipped, bought into, whether it's the Nifty Bank or the Nifty. So good, rebound is what we're seeing from the lows. And we'll have to keep in mind that today's expiry as well, so volatility will pick up. By the way, the Nifty Bank is on the verge of moving to the green. It moves into the green in the first 2 minutes of trade. Tracking the other stocks then, Thermax, well, they've received a demand notice for around 1,400 crores odd from the excise department. So that one, for the time being, it's higher, though it's ignored that piece of news. Hinduja Global Solutions as well, they've announced that they'll be meeting for a buyback, so that's opened well in the green. Shriram Properties, well, they've gone ahead and done an acquisition, so that stock, in fact, should be up for you on the screen as well. JB Chemicals, they have done a deal with Glenmark for a very small part of their portfolio. The deal is struck at around 5 times sales. So JB Chemicals should be up for you on the screen as well. IRCTC under some pressure owing to that OFS news that came about. VRL Logistics, yes, the promoter sold yesterday, but some marquee names got in as well. And remember, that was something that the street was sniffing. So that opens with a gain of around 1.5%. Nykaa, there was a large trade that took place. The stock opened with a gain of around 0.5%. And the other one is Sapphire Foods. Well, the deal happened in pre-open, and that's why now, in fact, the stock is up close to around 2.5% the last time I checked. Now it's trimming out some of those gains. Poonawalla FinCorp as well, the street was sniffing that. So for the time being, though it's a good deal, the stock has opened up with a gain of around 1% odd. Prashant.
It's a very good start, absolutely, I think you'll take it with both hands, no doubt about it. The other stocks which are coming up are Yes Bank. These are some of the follow-through moves from yesterday. Yes Bank, I think saw a very large move still day before yesterday. Yesterday it pulled back. I think it ended lower, but it's starting about 1.33% higher right now. Then you have these PSU bank names. Bank of India is one of the names I highlighted as something which is still some distance to go to get to its previous peak multiples. But the other ones I've not covered and which saw the biggest moves were Maharashtra Bank and UCO Bank. Maharashtra Bank is up 1.6%. Punjab and Sindh has been having this, wonderful move, a frenzied move, 2.5%. So 44 on Punjab and Sindh. So that is quite something. We can look at GIC RE. I mean, rarely comes up on any kind of stock radar, but it's coming up right in the word go this morning, 2% on this one. NDTV is up about 2.25%. It's got decent volumes as well. And VRL Logistics is starting about 1.33% higher at this point in time. So there is more, but I mean, volumes are yet to pick up in any great measure. So I think we'll come back to that as the day goes along. IRCTC, we have already highlighted that OFS for 5% lower. The stock's just under 700. Infosys, actually, tech is down. Infi is down. HCL Tech is down. I can see L&T, Mindtree, LTIM, that is down 0.5%. Look at Page Industries. I just highlighted the chart setups on Page. Page is starting about 1.5% lower. Yeah. There you go. It's right out of the gates. It's down, some, 1.5. That's $650 lower, 44,720. So that is Page, which is weak, at least to begin with. And there is more, but we'll come back to this in a bit. 22 lower on the Nifty, 18,637 is where the index is at, with 4 minutes of market trading behind us this morning. Vineet Samre is the market master of the day. He's head of equities at DSP Investment Managers. Vineet, great to have you with us here. Thank you very much. So we got the latest edition of Fed Speak yesterday overnight. We got a hike as well. And the general message seems to be that maybe the pace will come off, but because after this frenzied 75 basis point hikes, we got a 50 yesterday, maybe next one is 25. But the level is what perhaps what they're focused on. Level will stay high. Level of interest rates around 5% for the bulk of 23. The market doesn't seem to believe that, Vineet. If you look at the price action overnight, what is your sense? So it's in a way Fed versus the markets. Who will come out on top? Your sense?
So I think markets are clearly pricing, very specific narratives at the moment, and they are trying to look at the overall, price movement. So currently, as we understand, I think people are more focused on the inflation peaking out at the moment, and I mean one data point actually leads to changing the narrative totally. So I would say that while we have inflation peaking, but still in the US at the rate where it is still high from what their reasonable tolerance limits are, and hence I think that continues to remain a risk. Fed remains more hawkish in their in their directives, what we saw yesterday. But I think more importantly, till the time US keeps showing very strong economic data, the hawkishness will continue, and that should be sort of negative for the markets overall is the view we have. But as far as the Indian markets are concerned, we would say that the long-term structural story for the India markets, remains pretty constructive to stable. And I think that should, mean that the downside for the Indian equities should remain protected for the next, let's say, long term. And we may have some bit of, worries around the current demand environment, which is sort of showing some kind of sluggishness as far as the bottom of the pyramid is concerned, or the rural side is concerned. But I think beyond, despite that, we have seen decent growth coming back. And once we have the other part of the economy, which is the rural side of the economy, or the bottom end of the pyramid, which also starts adding up in terms of the growth prospects, I think that should keep the markets overall, tone positive.
Just wanted, to draw your attention, Vineet, also to the life insurance companies, because this morning CLSA had written a note where they say that the risk reward is now getting favorable for life insurers, and whether it's SBI Life, HDFC Life, all up over 1%. They have aggressive target prices on SBI Life at 1650. So just wanted your thoughts as well in this space, life insurance companies. Do you think that from a structural viewpoint, a long-term viewpoint, this is a good time to be buying in?
See, we hold quite a positive view on the life insurance business overall, because we believe that there is a huge market opportunity to capture. The companies themselves are changing the mix of the business in such a manner that which is actually leading to positive margin outlook for these companies, at least for the next 1 or 2 years. There are some intermittent risks which are emerging in terms of the competition from the high deposit rates and all that. But I think these in the considering the long-term outlook for the segment, I mean, these are sort of short or temporary problems, and I think these companies will continue to grow. And on the other hand, if we look at the valuations there, I think they are pretty reasonable as compared to where the overall markets are. So from that viewpoint, I think it makes a good case to look at the insurance businesses. And also the other factor is that when we compare across various sectors, it is very difficult today to look at businesses which are growing over and above the overall corporate rate of growth, where margins are expanding. More importantly, valuations are reasonable. So I think a combination of all of these is very difficult to find in today's environment. If you find good businesses having good growth, the valuations are not at all at reasonable levels. So I think from that perspective, on a relative scale as well, life insurance business actually becomes a good place to be.
Hi, Vineet. Good morning. Yeah, that's a valid point. A couple of those names, they're at pre-COVID levels, actually, if you take valuations into account, case in point being an HDFC Life. But Vineet, we are celebrating these all-time highs. Nifty is looking good. Small cap really hasn't participated. It's still 15% away. Now, I've seen your investment thesis over the last few years, and at times you'll have mastered that art. Do you believe the best is yet to come in terms of the breadth of the market, the broader markets? Do you expect 2023 year to be a better year, or do you expect this underperformance to continue?
See, I would not like to very particularly talk about how the category would pan out in 2023. But one thing which actually gives me a lot of confidence and hope is the fact that we are actually looking at a very broad-based economic growth. It's not polarized in a way when we look at what's happening with different sectors. So, be it consumption in bits and pieces, we have some places which is where it is down. But I think on the whole, consumption long-term trend remains positive as the demographics for us are favorable. When we look at banking, I think overall that is actually led by the overall economic growth that is growing. Engineering and capital good companies have seen record order books, and there are many companies, if we go down the market cap chain within the mid caps and small caps where one can look at. Then real estate as a category has started doing well. If you look at the overall bookings and sales growth, plus the balance sheets are delivered now. So I think when I look at the large segments, there is a good amount of positive momentum which we are seeing. I mean, it can slow for a while, but I think the long-term trend is what I'm hinting at. And these actually bodes well for mid to small-sized companies as well. And hence, our view actually on the category remains positive. But only one caveat we have is that when we are looking at the small cap as a category, our investors need to keep in mind that these are businesses which takes 3-4 years for their full cycle to play out, and hence the investment decision has to be considering those time horizon.
Vineet, you spoke about life insurance, which is in a way an underperformer. The other big underperforming sector is IT services, Vineet. What would you advise viewers? I mean, there will be pain, there will be slowdown, maybe growth multiples will come off, but is it time to start investing systematically into IT names over the next several months?
Yes, I would recommend that because overall, I think again, if we look at what is happening in the IT sector, maybe because of the global growth slowdown, there is a possibility that the rate of growth for the IT sector may come off. So what was growing at, let's say, 13-14% may look like high single-digit growth over the next maybe 3 or 4 quarters. But I think if you exclude that slowing growth, the other important factor to note is the profitability has now stabilized. I mean, there was because of the high wage cost and supply side issues, the profitability or the margins were getting impacted for the IT sector. I mean, those have now got arrested because of the slowdown, and the job market seems a bit tighter now. So I would say that is a positive factor as far as the profitability for the IT sector is concerned. Secondly, a long-term view on the tech spends overall, I think corporates will have to necessarily spend money on those, and that makes us believe that Indian companies are anyways going to follow those trends and are going to be remain relevant from that perspective. And hence, IT sector for us remains a long-term positive. To your question, Prashant, I think this is what we are also thinking that gradually as over the next 2 quarters or so, as the issues around slowdown keeps putting pressure on their price point at right valuations, we will be ready to look at increasing our exposure.
Okay. Vineet, have a great day. We will speak to you again very soon. Thanks for giving us your views. But one sector that has come back in a big way in the last many months is capital goods and infrastructure. So we have the management of IRB Infra. The stock, in fact, if you just map the last 1 year chart, is up over 40%. The company has seen a steady rise in toll collections in the month of November. Tushar Kavedia, who's the Chief Finance Officer at IRB Infrastructure Developers, joins us now to talk about that. Tushar, thanks a lot for joining us. You know, the last time we spoke to you, you said that by the end of FY23, you expect to see a 20% growth in toll revenues. Are you on track to achieve it? Do you think you can do better than that? And how are the toll collections up until now in December?
Yeah, sure. So, yeah, you are right. We spoke about some 20% growth in the toll collection for this year, and we are on track. We have been witnessing a robust growth month on month for toll collection across all of our projects. And presently also what you see for the month of November 22, we have seen a 39% of revenue growth across, considering on a portfolio which includes the IRB and the private InvIT portfolio. So this momentum is continuing for us, and we are quite confident to achieve at least 20% higher toll collections compared to last year.
All right. Hi, Tushar. Good morning. You know, Tushar, Nomura has put out a note and they're expecting some slowdown on the road capex from here on. They're saying that the government's hands are tied a little bit. They have limited scope to go and push that ahead. And ahead of elections, they believe there's going to be a slowdown. In addition to that, NHAI, well, they are saddled with debt. Put all this together, some part of the street believes maybe IRB is in a good position because you'll have a better balance sheet, you'll have some money that's coming in from GIC as well. My question to you is, what's the way out from here on? If government spending is going to slow down, how do you see things shape up? Will they go back to the erstwhile BOT model, which wasn't very good for banking names in particular? Or do you expect them to pick up the pace on the TOT monetization?
Yeah. Sure. So, yeah, we do have come across one report published by CNBC yesterday about a reduction in the capex from the government side on the projects.
Tushar,
hello.
Just to correct you on that, the report was from Nomura. CNBC was only expressing what Nomura was saying. Go ahead. You were making a point.
So we have come across with that report, and we tend to agree with that report, considering that the capex may reduce for the projects which are under the HAM and EPC, because that has led to higher debt for NHAI. So we also agree to that part, and definitely it may lead to a push from NHAI to the private participation project model, wherein they will need to come out with the projects under BOT or variants to BOT, where more private participation would be there. And we always discussed about that, company has always been focused on the integrated model where BOT always remain our focus. And with this shift, what we are thinking, because of the pressure for them, will help us a lot, and it comes as a benefit to us in a large way, because we have been working on the BOT segment, and today also our portfolio have a large BOT assets across country. Secondly, I also want to bring to your notice that recently there was a success of a BOT project announced by the UP state, that is the Ganga Expressway, and with that success, we are presuming that the other progressive states will also come on similar model of BOT, wherein the private participation would be more. And as such, IRB always be beneficial, because of the company's focus always remained on the private PPP model throughout its last 3 decades.
Okay, so Tushar, what you're trying to tell us is you all are well placed. If we go back to the BOT model, private participation will come back. However, my sense is that the bankers will be a little skeptical to lend to some of those private developers, which puts you all in a beneficial, position. Is that the way that we should be reading that?
Yeah. So as we see that now we have already a financial partner with us, like GIC, a big name for us, and they have been partnering with us in the BOT segment. We are having a better position for the upcoming BOT projects, or where we see more private participation in the models upcoming from the either from NHAI or the state authorities.
Right. Tushar, just to take the point forward, could you break up the assets that you operate under different models?
Yeah, we operate under BOT, TOT, and HAM. In fact, we have around we used to have 4 assets in under HAM, which out of which one is already being transferred to the public InvIT recently.
Yeah.
And we also operate on the TOT model, that is the Mumbai-Pune Expressway, which is a part of IRB directly.
Right.
And we operate BOT assets, which are part of the private InvIT portfolio, where we own 51%. And at present, we have almost 10 projects under private InvIT, where 9 are already operational and 1 is under construction.
Which one is this? This is the last one?
The last one is the Palsit Dhanpuri, which is also operational today, but it's a 4-6 lane project where construction is ongoing.
Okay. Got that. That gives us a good sense. Now, this Ganga Expressway, when will revenue start? That you alluded to that?
Yeah, so Ganga Expressway is a greenfield project which will take the construction time almost 2.5 years to 3 years for us. And once the construction is complete, we will start collecting toll on that project as well.
Okay, 2.5 to 3 years. So can you tell us what are the new order wins that you have? What's the order visibility like over the next 1 year? What's the target for FY23, both in terms of hybrid annuity and toll projects that you're looking at?
Yeah, so what we have seen there, we always seen historically the orders from the authority side come mostly in the 3rd and the 4th quarter, and we look for this opportunity. There will be ample opportunity under HAM, and in fact we are seeing we are quite confident of having DOT also during these awards. We expect a couple of projects to be in our kitty in next couple of months of size, say somewhere around 5,000 to 6,000 crores. And particularly if you see, our order book is also gives us a clear visibility for next 2 years, and we are quite comfortable in achieving our revenue targets for the next few years.
Okay. Just want to ask you also about the debt on the books, whether you think it could go up in the near future. You know, if there is lower tendering from the NHAI, if there is lesser fiscal space, perhaps lesser orders coming through to you, do you think that you may have to deal with higher debt? I think the last number that we have is a little over 13,500 crores. Do you see it escalating in the near future?
So we have been discussing this. These debt are mostly project-based debt, and all the projects are operational as of now. And we don't foresee any debt coming up for these projects. And in fact, what we work on the model is the construction plus BOT. So we looking to the margins what we generate from the construction segment. We don't foresee any further equity requirement or a requirement for a debt at the parent level. So our debt will further reduce over period because these all operating assets will be having a debt repayment over next few years.
Okay, Tushar, if you could tell us what could be the debt target then if it's going to reduce. And earlier you said that you're confident of meeting your revenue growth targets. So what is that target for FY24?
Yeah, so on a debt, we are presently placed at say 0.8 to 1 on a net debt to equity basis. This will further improve for us, and over period we may see the debt coming out in a phased manner, at least 8 to 10% year on year from here and now. On the revenue front, what you're talking about the target for the next year, we believe that the GDP growth expected for this year is somewhere around 7%. Considering even the same for the next year, we believe that the collection should be at least in the range of 10 to 12% higher than what we achieved for the year FY23.
So on the toll side and on the EPC side, or its consolidated revenue growth will be 10 to 12%?
So this I'm talking about the toll collections, what we are envisaging for the next year.
10 to 12%. Okay. All right.
Just one more question on, you spoke about how the toll collections have gone up month on month. Can you tell us exactly what has the tariff hikes been in some of your large projects?
So tariff hikes, what we have received was in the month of April 22, which was around 10% for most of our projects.
All All right, we'll leave it there. Thank you very much for joining us and running us through all of that. Appreciate you joining in with all of that perspective. IRB with focus on the business and looking pretty decent. By the way, it's interesting. I don't know if you can pull up like a 10, 12-year chart on IRB. It's interesting. I mean, it's basically back at 2010 levels. These are names which got into a lot of trouble because of the change in policies, focus from one model to another model of handing out projects. And of course, IRB is now back at all-time highs at 2010 levels, where it got to briefly, I think, in 2018. Then there was a sharp correction into COVID, and we are back at those levels once again. So 310 on IRB, 74 lower on the Nifty though. So we are at the day's lowest point. I think we are almost there, and there's been a sharp correction from 920, 925 onwards, although we're seeing some attempt at a bit of a pullback as well. Futures still at about a 70-odd point premium. We'll take a break. We're back, and we'll connect with Nikhil Chopra of JB Chemicals and Pharmaceuticals. The company is acquired. Razel from Glenmark, that's in the cardiac segment. We will also connect with MK Surana, former CMD at HPCL, and Harshvardhan Dole of IIFL, and talk about oil marketing companies. Crude oil prices have come off. Does that provide relief, and is there an investment case? Back with that.
Co-powered by